Happy Tuesday out there, Team 42. It's your skipper here, Darius to present our macro minute for Tuesday, January 21st. Hope everyone enjoyed the long weekend. So it's great to be back. So, as always, we'll start with the executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions, as well as what specific changes you need to make in your portfolio to remain on the right side of market risk, you need to be a client of 42 Macro. So, today's key macro question is: how long will markets digest policy driven volatility well? Our answers are less than 24 hours into a second term. President Trump indicated his first major policy proposal in outlining 25% tariffs on imports from Canada and Mexico, effective February 1st. The auto industry will be especially hard hit by these tariffs, with Stellantis, General Motors, and Ford importing 40%, 30%, and 25% of their vehicles, respectively, from these countries. China was conspicuously absent from these early tariff announcements. Instead, President Trump ordered his administration to conduct an investigation into unfair trade practices globally, currency manipulation, and China's compliance with the trade deal he signed with them in January 2020 after nearly 2 years of tit-for-tat tariff announcements. Investors must not get lulled to sleep by the early absence of fresh tariffs on China. We have high conviction that regardless of whether a new U.S.-China trade deal is negotiated or not, President Trump will still drop the tariff hammer on China. He does not have a choice, given that he must use tariffs as a source of offsetting revenues in the upcoming reconciliation bill to extend and expand the Trump tax cuts. All told, investors may find reprieve from liquidity draining U.S. dollar strength in the first few months of the year amid the aforementioned trade policy review process and debt ceiling induced Treasury General account spend down. By mid-year, however, we believe details regarding the hawkish contours of evolving U.S. trade policy will likely emerge alongside four other hawkish catalysts that may contribute to a global refinancing air pocket. Refer to our January 18th Around the Horn presentation for more details regarding those hawkish catalysts. Transitioning to our 42 macro dashboard here, as always, a wrap up with a question from our community. This one's regarding a further unwind of the yen carry trade. It says, hi, Skipper. I believe that the consensus view is that the BOJ will raise rates at their next meeting on the 23rd of this month. That is correct. It's fully priced in. I am curious to know whether your thoughts on if you think this would cause asset markets to crash again, similarly to how they did in August of last year. No, the answer is no. We don't think so. The move is fully expected in terms of what the BOJ is signaling. Recall that in July when they hiked rates, they issued a bunch of hawkish forward guidance associated with that rate hike that was contributory to the crash in the Nikkei and the significant decline that we saw in the S&P 500 and other risk assets around the world. But in my opinion, the most important dynamic of that unwind of yen carry trading was the fact that we had that very weak July jobs report at the beginning of the month in August, which contributed to a spike in hard landing fears amongst investor consensus, which ultimately created to, it ultimately essentially said, okay, there's no more reason to be betting on U.S. exceptionalism from the perspective of Japanese investors, Japanese capital allocators who have, obviously flowed tremendous trillions of dollars of assets into U.S. markets, into U.S. equity markets, U.S. credit markets, et cetera. Recall that we've been talking about for the past couple of years how the U.S.'s net international investment deficit has doubled in 5 years to December 2023 to about $20 trillion. It's got to be higher than that now, especially after last year's performance. So in our opinion, the unwinding of the yen carry trade is not just with respect to what's likely to happen with respect to BOJ policy, but it also has to have an element of unwinding the American exceptionalism story. In our opinion, that's very unlikely to be unwound, later this month or anytime soon. So we'll wrap it up there. Darius presenting our macro minute for Tuesday, January 21st, 2024, or 2025. I keep getting the date, the years mixed up. But Tuesday, January 21st, 2025. I hope everyone has a wonderful day. Best of luck out there. And I'm guessing if you're not a Ohio State Buckeyes fan, you're probably not going to have as good as a day as they are. So congrats to those guys for everything that they've demonstrated this season to become the 2025 College Football Playoff national title. Great season. Pumped for next year. Everyone have a wonderful day out there.